Hello traders, good morning, good noon, afternoon, Vladimir here, and this is the weekly forecast for 10th of July 2016. Last week on Friday we saw a big surprise. Well, surprise, maybe not that big, but a surprise from the non-farm payrolls market. From the US job market, the non-farm payrolls report showed that almost 300,000 new jobs were added to the job market, which is, of course, really great data and really good number. On the other side, the unemployment rate raised to 4.9. It's still way below what the Fed was looking for when started with the quantitative easing. So the numbers are great, basically, and the rumors are that the Fed might go and consider again the cash rate, possible hike of the rates on the next few months this year. The speculators still doubtful about this move because, well, after all happening in Brexit, with the Brexit, right, in UK and Eurozone, that the Fed will not go and make dramatic changes. And that was actually the final word by the market on Friday, when we saw the dollar, after the report, gain real strength. At the end of the report, return to back like nothing. So let's quickly go and cover the opportunities we have and the levels we are going to trade. Let's start with the New Zealand dollar, which from my point of view is one of the most interesting, and the reason for that is if we observe this cycle, we can see that 161.8 of the huge cycle we have here is well, slightly above 0.75, which I've been talking about for a while. But this is the zone of action right here, and here is another cycle coming to the same place. Take a look. Okay, right here. Now this zone starts to be pretty big, but this is a zone of action. I'll explain in a minute what are we looking for exactly. Now watching on the short-term cycles, we have this one, right? And on the short one we have this one. So take a look, we have few action of zone created right here. First one is right on this place, the second one is right here. That's where the New Zealand dollar is going to stop and make the reversal opportunities. Now the last rally, okay, we saw a great retrace down here, but at the end of the week we got this trend line broken and continuation. So that's the next important areas we can see, okay? That goes through 0.73, 50, 0.74, then we rally towards 0.75, 50 up to 0.76 area. This is the most important zones. Now, why actually the rally happened there? The Central Bank of New Zealand, they said that we put the rumors aside. And the rumors were about the Central Bank of New Zealand to cut the rates in the coming period, and they said no, we're not there yet. But that's a speculation, that's a classical behavior, because on the past they said not once that if the New Zealanders will keep rallying and keep gaining strength, they will have to intervene, they will have to act. And if we put 1 plus 1, we can find out that according to the weekly double cycle, which we have on this place, right, the 50 zone is right here in the middle of this zone we talked about. So we are approaching to a great zone of action. Get ready now. Don't push the button too early. Drop down to 4-hour chart. Let the divergence to regain itself. And we actually can see two things happen. One, we had false break on this place, right? We had a false break above, break below. Now we might go and get a false break right here, break above, break below. If that happens and we get a close after a false break of this top, we are after pullback on this area, and we will be trading versus the last stop, trying to get all this move. So that's exactly where the risk reward could get up to 1 to 6, 1 to 7, even 1 to 10, depends on the entry, how that could be, and maybe even more. That's exactly the opportunities we will want to trade, because that could pay. And if it keeps rallying, then we don't rush too much, because we will wait to see the gap close, and then we have a gap right here around 0.75. If we manage to do that, classical. Then of course, if it does a scenario, we will be waiting for this trend line to break, so we know we can start the momentum, right? So basically, if it continues this way, right, approaching this sell area we have been talking about, breaking the line, back into retrace, and then we are going for a sell. Same principles, okay? We will be trading versus the last stops to be created. We will be aiming right to the middle of all this movement right here. That should be below 0.70. It could be even 0.69, 0.68 area easily. So keep that in mind. It starts to be interesting, and it will be interesting. And if we add some statistic to that, we will find out that the New Zealand dollar, where it disappeared, here, the New Zealand dollar knows to create tops at the beginning of the month, but it created a short-term top because we had a short-term drop, right? And the next important date, actually, that's in the middle of the month. Everything 10, 11, 12, you see, 14, 15, that's very, very powerful dates. Therefore, this week could be the week for a top for the New Zealand dollar, at least on the short term. So keep that in mind, and let's see where these cycles take us to. The short-term effect should be here, of course. That's the duplication we can talk about. That's slightly above 0.70, so 0.50 or so. And if it rallies to the 161.8, that's going to be right here, 0.75, the area we have been talking about. Now that could be really great if it comes to there by the dates we have been talking about. We put this trend line on the top, and it will be right on the same area. And that's really, 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 really good zone. Now I want to show you the other New Zealand pairs. Let's start with the Aussie Kiwi. Aussie Kiwi surprised me a bit because it did create a convergence during the week, but it was not respected. The plan, however, did not change. Look only for buys here. This is the potential special cycle. The divergence is still here, so it will take effect from this area, maybe even a bit lower. That's what we are going to, and there is no doubt about that. Only question is when. Now take a look what could happen on the weekly chart. We did have 2 false breaks, and I will mark these areas where it all happened. Yeah, that's one. Let's put it again here. Try to be more accurate. This, yeah, here we go. Okay, that's the zone. Now we did have a false break right here, break and retrace, and then we have a false break right here. 2 false break could hint of a possible range. Now we do have a new bottom range. It's here, so we can get also theoretically one more favorite on the bottom, but then it means we are going this way. So summarizing that, Aussie Kiwi could play around this area for a bit longer. That could take 103, that could take 102, that could take 100 parity level. That's doable, but these divergences combinations are rare, and we had a divergence on monthly, and it's rebuilding one more low. That's really, really, really great opportunity. So keep an eye of a possible buy. Now since this stop didn't hold, let it, unless you invest, that's a different story of course, then just wait for false break to take place, gain another momentum by creating higher highs, and versus the bottom to be created, look for pullbacks back to the 50 level of Fibonacci or so, look for bullish candles, and go try the buys. We will be aiming to 110, 113, 116, and maybe further on later, but that's the most important level. So keep an eye for these opportunities, and if again taking a look on statistics, Aussie Kiwi knows to create bottoms. Take a look. Okay, also 10, 12, and then 18, 19. That's the very important dates. So that could happen as well on a very coming period. So keep an eye, guys. It's a very, very great area. One more is Pound Kiwi, but Pound Kiwi, be careful. Here is why: because we have a cash rate in Britain this week. They are expected to cut the rates by 25 basic points to 0.25%. Okay, that means pound pairs could still suffer. Now, if we take a look on the Aussie Kiwi, what can we learn, guys? We can learn that the next cycle for this one is going to come on here. It's gonna be 173, 172. Now, because the ranges are so big, actually let's go like here. Okay, because the ranges are so big in numbers, crossing by 300 would be nothing for that, because they were still on an action zone. So the best thing to do, this is the entire zone, okay, and you can see the big range here, huge range. So that's why we are not going to force that to happen so fast. We are going to have some patience. If we put the lines, the last bottoms, that's waiting us on 160. Is it reachable? The answer is of course yes. And that's also one of the scenarios. I know it sounds ridiculous right now, but never say never, right? Brexit idea also sounds ridiculous. That's also a possibility. And that could take us back to 120, 130 zone. Is that doable? Well, if we take a look at the bottom of these lines, the answer is yes. And that could happen pretty fast. You see, that's the ranges are huge. So let's keep an eye on what's going around with the pound dollar. Let's take a look what's going around with the New Zealandian, and then only then we can start to look for some false breaks and bullish reversals on a daily chart to start the investment. Okay, something like that, bullish, and then only then we can start to invest slowly until we make the rally. And I repeat slowly because the range of this pair is risky. Now, those of you who cannot allow such things to themselves, don't even try, guys. Seriously, there are so many other great opportunities. It simply doesn't worth to do that. And the last New Zealandian pair, and I know many of the New Zealandans are on the list for this week, but that's what we have. That's one of the greatest things here with this pair. Now take a look, guys. This pair is trying to make a possible break of this trend line. Is it doable? Well, watching on the monthly chart, the answer will be yes. Of course it is. Now, if that scenario keeps the rally, it means we are going higher. That could take us to 0.98, maybe even parity. So don't rush to press the button here too fast. The 161.8 level was not respected, this one, of this cycle, or even if you measure it this way, it doesn't matter. So the next thing that could happen here is the scenario of special cycle, which could be something like that, and that could be a duplication of this. Okay, take a look, guys. Let's double click in here. Okay, so don't rush. That's a very, very important thing. Let it create itself. Let it recreate the divergence. Once it does around these areas, we can always go on attack, and that would be our thing to do. This is the last trend line. So once we approach to the sell zone, okay, and recreate the divergence, breakout below trend line, retrace, then we can go for this sell. Okay, that's for the New Zealand pairs, many of them on the list. What's going with the other majors? Euro dollar, well, technically is still bearish. From my point of view, it's only undersell, but the euro dollar can do this as well, take us back to this trend line, for example, and then make the continuation. Every rally for the euro dollar sell, every rally for the euro dollar is a sell, sorry. Okay, now what are the zone of actions here? duplication of this possible rally towards 112, 113. That would be the action to look for sells. Okay, and if the euro dollar keeps the drop, then we are going for a potential triple cycle, which is 1, 2, possibly 3. The next area of action would be 107 and lower. Action for a possible buy, right? Until then, look for sells, sells, sells. And now, can the euro dollar make this rally? The answer is yes. And as I said, 112, 113 would be the new area for action. Pound dollar, I don't even want to discuss because it's too early and we have a cash rate this week. Ignore. Levels for the euro pound, that starts to be very, very, very interesting. And if the pound actually cut the rates, euro pound can make one more push towards the 087, 088 area, which we have been talking about for a while. Keep an eye around there. This is the place where the euro pound can make false breaks, and then we can start looking for a sell. Okay, don't look to trade it before the cash rate. A lot of speculations would be there. Simply doesn't worth the risk. So zone of action is everything above 087, 088 area. That's the zone of possible sell. That's where we should switch for the sell mode. That means, in other words, can we look for buys if it drops lower? The answer is yes. Since it's holding the small term trend line here, and if it will hold, break below this support can lead for some double movement, like 1 range 2. Okay, back to here, for example. From there we can go for look for buys, and again only expecting the cash rate in Britain to be reduced. That's the thing. Okay, if they actually cut, we expect for this push. If they don't even think about that at this stage. Dollar yen, a zone of action is waiting for us around 98, 97 down to 94, 95. 2 waves up should be a sell opportunity. We still didn't have any 2 waves up, so basically that would be the one. 1, 2, 3, 4. If we get it, we can go for sell. Okay, we have a trend line here. We have a trend line here. So zone of action for a possible sell for us would be 103 up to 105. That's the area of sells, and if we get 2 waves, that should be also like this. Then we mark the trend line and a sell after we reach the sell area 103, 105. Okay, that's very important. And the dollar Canadian so far looks promising, looks good, and yet on the same time looks extremely tricky. It had few false breaks in a row, so for me that simply probably means at this stage nothing to do. I mean, if you are in a buy, as we talked about in the last few weeks, great, hold it. If you are not in a position yet, I'm not quite sure this is the right time to do that. This pair should make the 135, 136. It's able to do that, and it could do it easily, but on the same time it could hold this resistance, make one more push towards 123, 124, maybe even lower, and then turn around and take us all the way up. So which of the scenarios will act? I don't know actually. Here, if you are longs, hold it, trail it by the trend line, great. If you are not long, then look for a short on every new high to be created. That could be ideally 135, 136 area. Not ideally, that could start from 133, 134. Which brings me to oil, which dropped lately, but oil could also start to look for a possible reversal here for one more high, completing the big cycle 161.8 or making a triple cycle here, also a scenario. Now this is what we currently have. This is 1, This is gonna do what we have here, right? And with the break of the range, that could be the 3. This is the range I refer to, of course. Breakout, this is the 3. 44, 43, that's the zone of possible action for a buy. So what we will want to see here on this area is gonna be something like a false break, reversal, higher highs, pullbacks, and a buy. You want to be more conservative with the trend line breakout to start and collect your buys. For the long run, if the bulls will come back to take control, the areas to watch would be definitely here, the 161.8, okay, above 60. That's doable, that's possible, and on the same time we could see the oil yet dropping a bit lower. So 43, 44 is the only first zone of action we will be after. If not there, next zone of action would be 39, 38. About the indices, they are boosting up, which is logical according to the speculations of another quantitative easing round. If it's from Carney, if it's from Bank of Japan, if it's the rumors about the Fed and the fact that the Fed does not plan to increase the rates, the speculations. So as I said not once, there is a big chance we are after 2200, maybe even higher, for the last cycle before the bears come back. For me it's only for sales, right? You know that I said it not once, but since it didn't hold the last high and it's trying to break, I am going to wait for a false break, wait for a new momentum to begin. It doesn't worse to try and be a hero right now. It's worse to use the patience, let it create all the setups, all the false breaks, all the areas and the levels to be taken. Then and only then we can go and make a trade there. Euro yen, start to get ready, guys, for an action as well. Euro yen, I just want to remind you that we had this cycle. 161.8 was and remain our action area. That's 105 and lower approximately. So that's where we will be looking to trade it. This is the current cycle. The last boost is building here, okay, and it brings us back to this area. That's again 105-ish. It could be a bit lower even. So let it go down and sell rallies. And same like the dollar yen, if it makes this kind of movement, go to look for a sell. So here, few waves up, trend line, breakout, and the only thing here is, remember, risk reward. We will want to find small risk, big reward. So our zone of action starts to be 114 up to 116. This is a possible zone of action, which again we will need to see some movement here, trend line, breakout, and then only then we can go for a sell. That would be our possible setups. We will be aiming 105 approximately. So that would be all for today, friends. I wish you a wonderful week. Good trading. And oh, sorry, Aussie dollar. I forgot the Aussie dollar, which we have to keep an eye as well. We had one false break to the top. One more false break to the top is reasonable. That's around 0.76 plus. We have this cycle duplication waiting us exactly there, and we have this cycle duplication waiting us exactly there. Okay, so this is a zone of action. Once we reach above it, like this, we can start to mark the last trend line, breakout, pull back, and we can talk about the sells. That's all, guys. Thank you very much for watching. I hope you enjoyed. I enjoyed as always to create the video. If you have any question, feel free to ask it. If you like it, don't forget to click the like, show your like as well. That's our motivation to continue and work for you guys, create these things for you and help you with your trading and give you some great ideas. By the way, I've been asked about the gold and silver. The reason I didn't mention them because my view didn't change. Okay, we did have 2 pullbacks down, and I believe we are going for one more high. There is a chance that we are after 1 2 1 2. Okay, back to this trend line and then a buy, but we will have to see how the week develops. Keep an eye on 2040 2050. If it holds as resistance, get rid of your buys. If it continues the rally, then we are going to 22 25 for one more high could be created here, pretty easy. So that's all. And of course gold, the same. Our zone of action was 1380 approximately. We are very, very close, but there is big chance gold is going to 1420 directly. So if it breaks and continues with the momentum, let it go, let it work. If not, our plan from the last week remains exactly the same. Nothing changed here, guys. Nothing changed. So once again, thanks for watching. Share with everyone who you believe can have any benefit out of it. If you have any question, just let me know. I'll reply as soon as I can. And enjoy your week. I'll see you soon. Bye for now, guys. Vladimir.